Good afternoon, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are here. It's the close of the market on a terrible trading day. We're going to go over it. First, term of the day. Okay. Very pertinent, especially... Guys, when I read Wall Street Bets, which if you guys don't know that, it's like a meme group, but it's also a very serious investor group at some points in time, maybe like 20% of the time. You have bulls, you have bears, you have doomsayers, you have moonsayers, you have everything. You have an eclectic group of people, and I love it for that. It provides laughs, it provides information, it provides ideas, and then it also shows me how ridiculous and sometimes, I hate to say it, stupid people are. For example, there was one guy, he was showing how the market today, it's down like 1.5% or what is it at? Let me look at it. 1.71, yikes. 1.71%. That's a pretty big drop for a day for the entire S&P 500. And he's like, yeah, this is more to come for my American neighbors. Basically saying like it's going to get worse from here. And if you know us, if you know me, I told you guys about what this tariff news is going to mean and how it's quick, swift, and it's done in a flash. And then we're on the way up. However, I don't even really think this has nothing to do with tariffs. It more has to do with the human emotion of things. We were just at all-time highs. Like 4 days ago, we just hit all-time highs. 3 days ago, I don't know exactly when it was, but very close. Okay. All-time highs. What are we even talking about? Okay, it's trending upwards like we said it would, like pretty much every economic indicator says. Who cares, right? We're not that 1.71%. We don't need that right now. We're focused on the long term. Okay, we're investors. We're not traders. We're not trying to we're not trying to shave 1.71% off our portfolio. Okay, we know where this is going, and we have optimism for the year. So with that, I wanted to use the 50-day moving average as our term of the day. So I'll read this. This is from investors.com. The 50-day moving average is calculated by taking the closing prices from the last 50 trading days, adding them together, then dividing it by 50. Plotting this alongside a stock's daily movement helps to smooth out the action and give you a better idea of where the stock is in a current run. So I say that because, well, sure, we had a terrible day. But like I said, 3 days ago, we had all-time highs. It's so much more about the journey than it is about what happened today, right? It's like going to the gym. You don't see anything that if you went to the gym one time, you don't see anything. You don't see anything the second day. And the third day, you're like, why am I even going? Okay, but on the 300th day, okay, the 100th day, you notice stuff and you're like, holy cow, look how far I came. That's the exact same thing with investing. Okay, that's enough of me ranting about that, okay? But I'm getting sick and tired of doomsdayers, all right? And there's the saying with the people who are bears that broken clock's right twice a day, right? So at least I'm sure they'll be right, but it's always momentarily. It's never, so far in history, it's never permanent, okay? So I don't even know why you'd want to be a bear, why you'd want to assume things are going to go to the crapper. It doesn't make any sense, especially because 500 of the world's largest companies, and in this case, the American companies, that's what holds the economy together. It's one of the economic indicators of success. So it just doesn't, the hope, the intention behind it just doesn't even resonate with me. Okay, let's get to the news because we got some specific stuff that we can talk about. And again, I'm here to get you excited. And when we see prices fall, especially for the companies that we believe in, okay, that's buying time. We're excited about that. And it's very difficult to do as an investor because all you're seeing is the money that you've bought go down, but you're not remembering it's not about where you're at right now. It's about the 100th, the 300th, the 1,000th day, right? That's when you really see results. Okay. Stocks tumbled Friday as a big decline in shares of United Health weighed heavily on the Dow Jones Industrial Average, and investors reacted to disappointing economic data. The Dow and S&P 500 each closed 1.7% lower. That's so much for a drop. That's The most I think I've seen is 2.8 in the last 2 years, something around there. And then COVID had horrible days, but again, they bounced right back. The Dow and S&P 500 each closed 1.7% lower, while the tech-heavy NASDAQ composite dropped 2.2% after losses accelerated during afternoon trading. The major indexes, which were coming off a down session on Thursday after 2 straight days of gains that boosted the S&P 500 to record highs, posted steep losses for the holiday, shortened trading week, and are now in negative territory for the month. The Dow fell 2.5% this week, its biggest drop since the week of October 25th. The NASDAQ also slid 2.5% this week, its largest decline in 3 months, while the S&P 500, which was down 1.7% for the week, turned in its weakest performance since mid-January. United Health Group ticker UNH shares sank more than 7% after the Wall Street Journal reported that the Department of Justice is investigating the health insurer's Medicare billing practices. Ooh. What is the, what's the guy's, I'm going off on a tangent, but, who's the guy that shot the executive? Frigioni or whatever. Anyways, that's what comes to mind with this. Maybe this is them taking that seriously and wanting to look into things. Who knows? Shares of other insurers, including CVS Health, Humana, and Centene, also lost ground. Shares of the world's largest technology companies were down across the board, led by a near 5% decline for EV maker Tesla, AI chip maker NVIDIA, which is due to report quarterly results next week, which we're super excited about, by the way. Mark your calendars, the 26th. I'm pretty sure it is. I can't wait. I'm going to listen to that live. Dropped 4%, while Apple, Microsoft, Alphabet, Amazon, Meta, and Broadcom also retreated. A handful of stocks make big moves after the release of earnings reports. Akamai Technologies, I don't know what that is. AKAM, AKAM is the ticker. A cybersecurity and cloud computing company, there it is, plunged 22% to lead the S&P 500 decliners, while cloud storage provider Dropbox and fintech company Block each slid more than 16%. Among post-earnings gainers, energy drink maker Celsius Holdings soared 28%, and e-commerce company Mercado Libre, ticker MELI, jumped 7%. Oh, good for Celsius and good for Mercado Libre, too. That's a fun name. Coinbase dropped more than 8% after rising as much as 4% early in the session following news that Securities and Exchange Commission is expected to drop an enforcement case against the crypto exchange. That's exciting. Bitcoin was at 95,000 in late afternoon trading after rising as high as 99.5 earlier in the day, its highest level since February 4th. The yield on 10-year treasuries, which is correlated with expectations about where interest rates are headed, was at 4.43%, down from 4.5%. At yesterday's close and trading near its lowest level of the month as investors digested economic data released this morning. Existing home sales numbers came in lower than the economists expected, as mortgage rates and prices keep many would-be buyers from the market, while separate reports show that consumer confidence has been shaken by long-term inflation expectations and the uncertainty about tariffs. Ooh, tariffs! Gold futures were down slightly at around $2,950 an ounce after hitting a record high on Thursday, while West Texas Intermediate crude oil futures slid 3% to $70.25 a barrel. Wow, going to be tough to get you excited about investing after that news report, huh? But no, it actually isn't going to be at all difficult because, again, these are buying opportunities. And again, I reiterate this so often because it's important for new listeners. And believe it or not, we are getting new listeners. We firmly believe as a firm, especially for our own clients, a large portion of assets are in basket funds. So ETFs, mutual funds, things that are inherently by themselves diversified. Okay. Warren Buffett says 80% of people, or for pretty much everybody, 80% of their portfolio just needs to be in mutual funds or ETFs and track the index, right? The S&P 500. And the reason he says that, and it's probably true, I hate to admit it, is that people just aren't smart enough or bright enough or removed enough emotionally from their money to be able to do individual positions. Now, with that said, I hate to say I agree with him, but because it just sounds bad, but I do agree with him. And that's why I exist, right? Because I'm supposed to be, quote unquote, a professional at this. We're supposed to be able to help those people. But then 95% of investment advisors don't beat the index. So what, like how does that even happen? Well, I can tell you from experience that the wealthiest regular people, and I use regular like, I don't know, what would be a regular term? I'm trying to think. So less than $3 million saved up. Okay. That's a majority of people, like 97%. Okay. If you have $3 million in your total net worth, you're definitely in the top three, probably top one in some metrics. But as far as the metrics I'm using, top 3%. Okay. If you're in that range, if you really like, you're a regular person, if you would have just owned either the company you worked in or someone like the big 90s companies, right? Waste Management, Apple, Microsoft, Amazon came in the 2000s, but like those types of companies, right? That were sort of at the forefront. And now they're mega. Walmart is one. If you would have just owned some of those shares, you would have an incredible net worth right now. And I think of an example right now, P&G, PG&E, Procter & Gamble. I don't remember how they were titled, but I know somebody who got hired and fired by Procter & Gamble multiple times in his career. He was just a salesman. He was literally a salesman for them. And he's got like $25 million now. Because through the turmoil of that stock, he just never sold. And it was sort of like dumb luck, right? Like he just stumbled upon that. But he held that position his whole life. And it's like, oh, now he's got $25 million and people are asking him how he did it. And if you met this guy, you'd be like, wow, this guy is just off the wall, wiry, wild. Like, I can't believe you'd never know this guy had that much money. But he did. And he actually didn't do anything special. He just held the company that he worked for. And a lot of people have that situation. They just sold when things were high, or they got scared like in 2008 and then they sold. Like there's so many different ways, but he was a regular dude and all he did was hold, and it was the sheer dumb luck. But sometimes there's a saying, you'd rather be lucky than good. And in this case, it's very accurate. But to get a little bit more technical with you guys, one of the research tools that we use is Fundstrat, Fundstrat, Fundstrat. Thomas Lee, if you guys know, have heard that name, he's basically the analyst. He owns Fundstrat. He's very bullish on the year. I love reading his research. It's very clear cut. A lot of it's technical, but some of it's fundamental. And it reiterates how I think about things. And he has some bullet points that I captured here that is just talking about today and where we're at, right? So let me read this and then we'll briefly cover it. So Tom Lee says, investors have been persistently bearish while S&P 500 made all-time highs. This is rare, and in the past 40 years has only happened 11 times. Forward returns were generally good in these historical instances. So he's saying that when the S&P 500 hits new highs and then everybody's worried about it, it tends to be really good for future earnings or future return on the S&P. Investors are, quote unquote, buying the dip as 2025 is tracking better than expected, while market participation is broadening beyond Magnificent Seven. Magnificent Seven, guys, is like Amazon, Google, Netflix. Did I say Microsoft? I can't remember. Facebook. There's a couple others, but I'm reading this right now. They're just like the huge companies that we think of. While stocks fell sharply at the open Thursday and selling was broad-based, dip buyers stepped in and the resulting decline Thursday was modest. This is a pattern seen in 8 of the last 10 trading days. Dip buyers step in on any market weakness, and it has been a pattern for 2025 overall. So that's just saying that when things go down, people like me are like, okay, let's put a little bit of money in because this is a buying opportunity. If investors are skeptical of markets at all-time highs, we believe the odds of an actual high in play are low, meaning that it's going to keep going higher. Like if this is an actual high, or is it just a stepping stone on the way up? So those are some bullet points that I really loved that he was talking about in his latest insights. And another thing that he doesn't mention there, but that I'll tell you, guys, there's a lot of money in cash right now, like $7 trillion on the sideline is what it's called. if you're in the market or you're in stocks, you're in play, right? And then if you're waiting, you're on the sideline. So there's $7 trillion waiting to get into the market. That's exciting because they're looking for these buying opportunities. Where do we get in? How do we get in? Do we want to stay? That's going to drive the market higher as well. So there's lots of indications for bullish mentality. And here at 77, we are bullish. And I just want to mention, NVIDIA has their earnings next week. I kind of touched on it. Please listen. It'll take 5 minutes, or maybe they'll take 10 minutes, but just hear what they're doing. Okay. They're the leader in the chip making world. And it's a great way to just get an insight of, how a lot of people in the world are investing. And not even a lot of people like you and me as retail investors, but companies are using NVIDIA, right? They're using the chips that they're making. They're the largest. NVIDIA is the guy, right? If you're playing a sport or basketball, for example, Michael Jordan's on the court, LeBron James is on the court, they're the guy. That's NVIDIA. So, and if you guys don't want to, don't worry about it. I'm going to come here and summarize it for you next week anyways, because I can't wait to listen and go over it. So as always, guys, invest early, invest often. We'll see you next week.